All right, welcome into Mining Stock Daily. This is our second long-form episode of the week, and it's going to be a good one. We've got the Koala back in studio, talking all things the BHP-Anglo saga, which happened to basically be a nothing burger. And then we've got some more news with Glencore out of Kazakhstan that we cover as well, and all things copper. And there's Koala opens up surprising things from Koala that may catch a lot of listeners by surprise here over the next 45-50 minutes. So happy to have Koala on as usual. Usually happens once or twice a year. Again, special thank you to Visa Silver, Victoria Gold, Fireweed Metals, and Arizona Sonoran Copper for your continued support of the podcast. And if you wouldn't mind, you, the listener, the viewer, hit that like, subscribe, share, all the things, and some constructive feedback is always welcome. All right, everybody, let's jump into this conversation with Koala from the eucalyptus tree. We're going to conclude the week with a climb up to the eucalyptus tree. Happy to welcome in our good friend, the Koala, for a nice long conversation. There's a few things we got to talk about, Koala, but first of all, welcome back. And I must say, it was a pleasure having a beautiful meal with you in your neck of the woods the other week.
Yeah, it was a nice spring day, concrete jungle. Trees thriving, and I got a nice hot cup of tea here, and let's get after it.
You ready to go? Okay. I love it how
I don't think I've
Go ahead.
I don't think I've been in front of a microphone in over 6 months. I mean, I'm a little nervous.
Uh-oh. Well,
the confidence is a little shaken. I mean, I'm a little scared right now.
Oh, well, I won't be too hard on you, but I love how you
self-confidence has always been my problem, as you know.
Yeah, right. Far from it, far from it, Koala. All right, listen. You go out on Twitter there. You mentioned that you're coming back on MSD podcast, and then you kind of you open up the floodgates for ideas. And so we're going to try to tackle some of those topics. I know people are very much interested in, but there's a couple big deals, a former, I guess, big deal that didn't come into fruition, and then another one that's just got published, the idea of this today, but we're going to talk about that BHP, that $49 billion deal for Anglo, which did not happen. Listen, I'm just curious your thoughts on this. I mean, was this really ever going to happen? I mean, who wins out with nothing happening here?
I think the winner is Glencore, actually, because BHP shows up with a proposal a month before South African elections with a structure that says, and I was saying this ad nauseum when the deal came out initially, we're going to give you less than the unaffected price in BHP stock, and the premium is going to show up in these two spinouts of Kumba and Anglo Plats. Where did we end up before the deal fell apart and BHP walked away for at least 6 months? BHP was offering, so call it 21 pounds, which was roughly the unaffected price in BHP stock to Anglo, plus the premium was going to be in the spincos. Mike and the board refused to budge off of the need for those spins, and in many ways, I think, offended the South Africans in the middle of an election cycle. Not sure if that changed the election at all, but I think just in general, given the nature, and there's been many thoughtful things by, like, a very thoughtful former South African banker went on Money of Mine and talked about this. Sorry to plug the Aussie competitor, but the reality is
those guys are great.
This structure,
I have nothing to say.
The structure as proposed, BHP seemed to want a deal that was perfect for them and weren't ready to take on any risks or dynamics. And the funny thing is, when a deal looks perfect and obvious and the target is not distressed, they're going to say no. I think it was too cute by half. And look, think BHP should have shown up and said, here's 25 in BHP stock versus 21 unaffected, gotten told, go to hell, GFY, and then said, well, what if we spun out Kumba and we spun out Amplats on top of 25? Now, clearly that would have been 25 plus 8, 33 pounds. Maybe the board wasn't ready to go there, but I don't see why Anglo-American shareholders were going to take a, call it 12 to 24 month approval process, during which time, at these copper prices and these coal prices and these iron ore prices, Anglo should generate real cash flow to help solve the balance sheet, especially now that Woodsmith isn't going to get a lot of capital in 25 and 26. So you're going to take all this deal risk when you might have your problem solved anyway, and you're not even going to get a premium in BHP shares alone. And you don't know what the flowback's going to look like on Kumba, on Amplats. And I think that's important too, because we all remember Tungela. The first 2 days of that thermal coal spin out of Anglo was violent in terms of the puking of the stock. And it was a great buying opportunity for some. But look, I think, what did it force Anglo to do? Anglo had to come out and show what their plan to stay independent, go it alone, and kind of implicitly say, if we are going to be part of a major industry consolidation, there's a much better price for Anglo shareholders if we're allowed to cook for another 2 or 3 years. And what did they do? They said, we are going to sell Anglo coal. Anglo coal, 15, 16 million tons. Maybe it can get a couple million tons back as they gets right fitted over the next couple of years. But I've talked about this before. EVR, the tech business that Glencore is buying. Glencore is buying 77% for $6.93 billion. That's a $9 billion implied valuation. 25 million tons. Let's just go dollar per ton basis. 16 million tons. That gets you to 5.76, but BC doesn't have onerous royalties. Queensland does. This is a $4.5 to $5 billion sale. And by BHP forcing the issue now, who besides Glencore is in position to bid for this? Unless, unlike for Blackwater and Daunia out of BHP, a Indonesian or Indian operator is acceptable. Among Western operators, there's Glencore, and then Whitehaven has to prove that Blackwater and Daunia work to get the license to do this, and then still $4.5, $5 billion's that's a real ticket. I don't see the American met coal producers going to Australia. So ironically, coking coal is one of those few commodities where the best businesses actually probably trade at lower multiples, because if they're going to trade in a M&A scenario, there's just not that many pools of acceptable capital for these Western operations. So who's the winner here? Well, who can compete with Gary for Anglo Coal? He's going to probably gets a bid 4.5, maybe gets talked to 5, but I think you're in a world where he buys Anglo Coal, and then 16 million tons there, 25 million tons at EVR, which 77% of that is, call it 18. I don't know if I did that math right, but c'est la vie. 18 plus 16, you're at 34. You already had some. I mean, he'll have created an incredible coking coal business in a time period where everyone's been obsessed with copper. And I don't know, I think Glencore is in a position to create a lot of value here, because Anglo now has committed to selling coal. Now, who knows, maybe in 9 months, if everything's going great, Anglo shareholders say, don't you dare sell coal. But we'll see. I think Glencore comes out a winner. And I think overall the copper industry comes out a winner, because we now kind of understand how rare these great copper assets are and how difficult they are to trade in. And the obvious now questions everyone asking is, okay, what's BHP's next plan? if not Anglo.
Yeah.
And
Okay.
that's
So
a very short list.
let's take a quick pause there before we go down big rabbit hole. And I'm just trying to take a quick note here because it's a second part of a question I want to ask you. Okay. So you mentioned you did mention previously that earlier part of that answer, Koala, you said maybe it was lacking another 20% on the bid price. I mean, so let's just call it 25. The last one was 21. You said maybe 25 got it over the mark. So there's 20% there.
Well, no, 21 of BHP stock plus the premium. It was 29. It was 29 pounds.
Okay.
I'm saying if you'd gone from 21 BHP stock to 25, 33. So 33 versus 29. But yeah, you're right. You know what? You're right. 20% more in BHP stock. Yeah.
Okay. 20% more. Okay. But anyways, that number doesn't matter. But what we have here is basically some sort of understanding of what a foundation, what another bid might look like if Anglo, the coking coal business, were to come on the market. So if there was a bid for the coal assets, at least, players in this have some sort of understanding what it has to be. Right. And so that kind of opens up a bigger playbook here, not just for BHP, but for the entire scenario here of players who might come in and want to make the bid. So actually, I think did BHP do everybody else a favor here to understand where they'd have to go if they were serious about this?
Yeah, I think you kind of now have a good understanding of Anglo shareholders being comfortable, and it looks like roughly compared to the peers, it's held up decently well since the bid walked away. The whole premise now is that this copper and high grade iron ore entity that will be left after this go it alone strategy simplification is going to be worth a lot more than 29, 30 pounds a share.
Yeah.
And that's because you look at what the Freeport, Antofagasta, Southern Copper, unique exception because Grupo Mexico has 90% of the shares outstanding. But you look at the multiple on Freeport or Antofagasta, pure play copper, they're the envy of every other mining company, basically.
Okay. And you also mentioned, obviously, the coking coal assets and when everybody's looking at copper. And so maybe this is an idea that maybe is passed on a lot of investors and speculators. Because, listen, we see the supply-demand curves out there for copper moving out into 2035 or whatever. But I think a lot of people have forgotten that the coking coal realm can be like a huge multiple and derivative of the copper play, can it? Is it a forgotten position?
I mean, Don Lindsay in his one of his last earnings or presentations had this amazing slide that said coking coal was basically critical to the energy transition because to make the quality of steel you needed for a windmill, you need to be in a blast furnace. So you needed coking coal. I mean, I was recently in Central Asia, and I thought a great irony here was everyone talks about Kazzinc needing to build a sulfuric acid plant to solve their sulfuric acid needs. And that'll be done in 26, 27. And I asked them, so just out of curiosity, where are you going to get the sulfur from? And they go, well, in the Caspian Sea, where Kazakhstan has a lot of oil production, they strip out the sulfur. So we're going to take that sulfur, bring it to the sulfuric acid plant to make sulfuric acid. So the irony is you actually need petroleum production to get the uranium to create the green power. I mean, there's so much interconnectedness here. It's not like, oh, copper wire is the be all end all and solves everything here. Or as just someone said to me about green steel, it'll be in the car park in the 2040s, but it's going to be one car in 1,000 car park. Like this is going to take a lot longer than we all thought.
You mentioned Kazakhstan. I mean, obviously, that's the other big news item that just kind of dropped on us today as we're recording Koala. Glencore, it sounds like they might have some interest in selling their majority holding in Kazzinc. to a potential Chinese buyer. This opens up a huge can of worms as far as, listen, we got to talk about Kazakhstan and where it's situated as far as being a supply for resources between East and West, just because of where it sits and its tremendous amount of abundance of, huge deposits. So we can talk about that, but also Glencore potentially in the works with a Chinese buyer. I mean, Western governments, we continue to see maybe push against those types of deals happening anymore. General thoughts here on just the idea of Glencore selling that Kazzinc to, I guess, anybody. It doesn't have to be just Chinese, but what sort of significance does that show to the market?
I think it shows a important point about, and frankly, I think this has been the case since the Brumadinho tragedy, that people want to rationalize, the majors want to rationalize their portfolios to assets that really move the needle. I mean, Nickel West for BHP is a problem to solve as a nickel business in Western Australia, but the amount of management time that's probably taking for something that will probably never be more than a couple percent of EBITDA doesn't really matter to the stock. But it's a distraction. It belongs in a different home. Kazzinc is a really nice business, especially that if you include the great gold mine there. It's probably, as someone said to me once, outside of Red Dog, Kazzinc, I mean, who actually makes money in zinc if you think about Western operators. Now, Hindustan Zinc's a lovely business in India, to be clear. But I think if they look around, they say, okay, the reality is Glencore is a coal and copper company. And unless nickel really flies again, the nickel doesn't really move the needle either. So does it make sense? Can Kazzinc continue to call down growth capital? I mean, it's a brilliant business. And the reality is, I don't know the exact flows of the zinc out of Kazzinc, but I assume it mostly goes to China. The same way Rio Tinto runs Oyu Tolgoi, Mongolia, and all that concentrate goes to Chinese smelters. Metals are a global market, but something, whether it's in Mongolia or Central Asia, if it goes to China, it means China doesn't have to import from the seaborne market, which of course then opens up material for the West. And even if we're going to these more regionalized metal markets, there's a role to play in what I'll call the Asia ex-China metal production for Western miners.
Is Kazakhstan becoming a strategic jurisdiction between East and West?
I would say it's getting more attention these days because, and I've told this story, I think, on Twitter, but when one CEO was on his retirement tour, I asked him for any parting thoughts, advice, and he said, Koala, I've managed or been responsible for operations in over 100 jurisdictions. The best jurisdiction I had was, ironically, Kazakhstan. They wanted mining. They were good partners. If there was a problem, they called us. We sorted it out. I didn't have issues with permits or right to title. It was a very professional and very functional relationship, and they want more of it. And we made good money. And yet you try to explain that to anyone in the West, they can't wrap their head around it. They can't even find it on a map. They think it's something from Borat, and that's it. And to me, I think everyone's now realizing, as you look at, there was this whole hope a few years ago of, oh, the U.S. is going to have permitting reform, and we're going to have more copper in the Western United States, and we're going to have a domestic supply chain. And yet, what progress have we actually seen? I think going to places that have established mining industries, want more of it, you have to go where the geology is, especially if you want to make through the cycle returns. I think these things getting the sentiment around these things to evolve takes time. But you gotta go where the geology is, especially because I've yet to see a case that someone's willing to pay 2x for an EV or any sort of good containing metal just because the metal was mined in a certain jurisdiction.
When you get into this geopolitical nature of metals and resources here, Koala, there's this. I'm trying to figure out where, I don't know, the driving force is for these projects. And we've seen a lot of capital coming in from the U.S. government, from DoD, DOE. I mean, it's obviously been a very important agenda for the Biden administration. It was before Biden too. It was important under Obama and Trump as well. But we have what U.S. projects have not had was really much of a public market to support them. On the other hand, on the other side of the world, we have China moving in. They've been moving into projects very aggressively for 20 years now. And I'm just kind of like sitting here wondering, like, neither one of them, whether it be the Department of Defense or, a Chinese entity coming in and pushing these projects forward, neither of them can be the end all be all, can they? I mean, are we narrowing the opportunity space here too much?
It's still not cool to invest in mining. People want to invest in NVIDIA. They want to invest in crypto. The mindset is no longer about these management teams have to make 10, 20-year capital allocation decisions. People don't think that way. It's a very I think the social media has really destroyed our attention spans and our patience. And so, look, to kind of anticipate a follow-up question here, the funny thing, the Chinese have been incredibly proactive. Ivanhoe Mines does not get to build Kamoa-Kakula without the foresight of Zijin and then CITIC. And yet, they clearly can't buy any more of it. If anything, CITIC is looking to place 1 or 2%. And I think it's quite clear, it's all, and then you saw Zijin kind of not get approval for their Solaris investment.
Right.
The Chinese Black Amex is no good anymore.
So where's the void? Who fills the void? I mean, it can't be the DoD.
I stand by what it's going to take for the Western capital markets and just capital in general to re-embrace this sector is going to be, to use a Scandinavian saying or just a general saying, envy is greater than sex. They're going to need to see some real fortunes made and then say, wait, we could have done that too. That was so obvious. It's going to take time and the realization of, wait, why are we messing with things trading at 20, 40 times sales when you can buy things at 3-year payback in the naughty commodities to even 8 to 10 years in the sexy commodities? I mean, versus 20, 40 times sales. It's it's only going to be once people are envious and have FOMO that you're going to get this to happen. So, I mean, higher commodity prices, higher returns, and then people get jealous. I mean, the DM inbox blows up whenever the coal stocks fly for a week or copper flies over $5. I mean, people love momentum.
What was your thoughts about that big run up in copper over $5? Too speculative? Too fast?
I am very surprised by what's happened in copper spot markets this year. I think Cobre Panama obviously tightens up the balances. Mm-hmm. The TCRCs showed that. China seems to be stocking it a lot. I think there's always a question of what exactly is driving this. Um, if my personal view is Cobre Panama does come back in the next 2 or 3 years, which assuming at some point we're going to get this narrative, there comes 1% of the copper market right back. I think it pulled forward some of the medium-term factors, but I think these things got a little bit frenzied. I mean, when you have commodity traders going out, hedge fund traders going out saying 40,000 a ton copper, you're like, yeah, yeah, no.
It's only $20 a pound? If I'm doing my math right? $20 a pound? Is that, I mean, is it fathomable? Perhaps. Is it, a little aggressive to say at this moment in time? For sure, right?
I mean, one day, but also guess what? In that world, the cost curve has escalated massively as well.
So, cool. One thing
I think there's an interesting point. I mentioned this. I mentioned this yesterday, but like, if you go back and look at the Escondida financials in the early 2000s, when copper was under $1, 50% or so EBITDA margins, which means 50 cents a pound margins. Today, Escondida's costs are, call it $2 a pound, 50% EBITDA margins. They make like over $2 a pound. No one 20 years ago saw that coming. And Escondida has moved up the cost curve a little bit in percentile, but like, that's, yeah, simple as that.
Yeah. So what, let's talk about a couple of things.
Think about margins, not just nominal price.
Yeah, fair enough. Let's change the topic here, Koala. We talk a lot about kind of the big mining producers, various metals when you and I chat. What we don't talk about very often is exploration and development. And so let's spend a few minutes in that realm. And is there anything from your perch in the tree that is exciting in development and exploration right now in metals? Other than Vicuña, because we've talked. We've talked extensively about Vicuña.
Yeah, well, it'll be fun to see how that all plays out. I think the thing that I'm curious about is where is the reward for the rare successes? To our point earlier, when you asked where's the capital coming from, well, where are the producers and majors saying, okay, that's an asset, that's a tier one asset that belongs in our portfolio. Things are being left out there, and I think it's because, to the earlier conversation about BHP, they want the perfect deal, they want the thing that has the perfect IRR, and instead of going, actually, we're not going to blow the balance sheet on this. We want this. It's a good asset. And we got to think with a longer time horizon. I mean, there's been a decent re-rating in some of these bigger guys. They don't trade at 4 times EBITDA anymore. And if you have a higher multiple, that's the market telling you to think with a little bit longer time horizon. I mean, where is the next great copper asset? I mean, where is that project that is self-evident to be discovered? I mean, there's some small stuff here and there, and frankly, I think that not to totally change the topic, but I do think some of these smaller copper producers need to scale up and get bigger and merge and create something different. But I mean, we got to go looking for big prizes. Let's see what Ivanhoe Electric finds in Saudi Arabia, if anything, with that joint venture. What's going on in the Western Forelands? I don't know, what's going to happen in are they going to find another Actagai, Kaz Minerals, porphyry-esque thing in Kazakhstan? Are they going to find some nickel there? I don't know. To me, I'm not seeing the reward right now for exploration. And that's just going to make this cycle even more violent.
I want to talk about this copper merger idea. Do you believe activities like that could and should be based on jurisdictional proximity Like there's a lot of kind of mid-tier copper producers in like Chile, for example, or Peru that could very easily be kind of put into one vehicle, right?
I think it's about pairing the right management teams and the right assets together. Um, I think there's a lot of fluid, multivariable dynamics to get the right thing going here. But the reality here is everyone's envious of the Freeport multiple. Well, then you got to build something of liquidity and scale that at least can let those Freeport give those guys who just say copper equals Freeport. Give them something within their liquidity mechanisms and mandates that they go, oh, that's an alternative trading at half the multiple.
And this is just me thinking out loud, kind of going back around here, Koala. But now that BHP is off the hook with Anglo, does that maybe ignite the talks with them taking a more significant approach towards a company like Filo?
I have to think that a big company like BHP can think about many possible things at once.
Yeah.
But let's say there is an aspiration to get to 2 million tons of copper. And I think the end game for BHP down the track here, if they don't get a proper multiple re-rate with a bigger copper business and coke and coal ends up being an issue, I mean, is it crazy to see a world where BHP at some point in the 2030s is a copper business, an iron ore business, a coke and coal business, and a fertilizer business, and they're all distinct companies? The simple fact is, what was, I think, Gary's aspiration with putting Teck and Glencore together, including the metals business? It's, if you think about all these great copper businesses, I would say with potentially the exception of Freeport, where I think Grasberg is their cash cow, all the copper businesses are kind of have been supported by a cash cow business, whether it's the iron ore at BHP or Rio, or it's been all the legacy South African assets at Anglo, or Teck with coke and coal. The whole question is, people want pure play copper exposure. I mean, there are these folks who they just want exposure to pure things. They don't want even to have a hint of coal, iron ore, ignore the legacy of how these things were financed in the first place. But how do you build a big enough copper business such that a copper company can self-fund through balance sheet and free cash flow, building another copper asset to give growth, to support the transition, while also providing capital returns to shareholders? QB2 ended up costing $9 billion. Let's say $2 billion of that was COVID. Probably was a little less COVID responsible, but $7 billion to build a 300 KT copper mine over 3 years. We'll back out. There were some COVID issues there too, so it's been longer. But we're talking about $2 billion of growth capex a year. And that's sort of the direction that these porphyries of world-class nature are going towards, these capital intensities. So how do you get $2 billion of growth capex and still also return cash to shareholders, with the recognition that the market doesn't really want these companies to be very levered? You need a certain scale of copper production if you're going to be building these projects without milking some iron ore cash flow or some coke and coal cash flow. So how do you get big enough to be a competitor to Freeport? I mean, in Freeport's case, you look at that company, most of the free cash flow is in Grasberg in Indonesia, and it's funding Kusing Lar, which is a new block cave there over the next 10 years. Like that is a cash cow for Freeport if they ever choose to invest further in North America or added Cerro Verde or El Abra. But how do you get enough scale in copper that you can afford to build these big projects?
Do you have to diversify into other metals? I mean, do you can't just be a pure copper player. You have to go into iron ore, coking coal, maybe have some optionality with nickel and zinc. But at the same time,
But
the
then you
reason
don't
I
get the
ask,
multiple.
the reason, yeah, no, I totally get that. And the reason I ask it, I mean, it wasn't too long ago, at least in our lifetimes, before I was actually really paying attention to this stuff. But, Freeport tried to diversify and go into oil. And it was so disastrous, they lost Tenka because of it, right? To try to get themselves out of the hole.
Yep. They had to sell Tenki Fungurumi. Icon went activist. I mean, just unless you're a management team with a proven track record of creating value, the diversification pitch, I think markets struggle with it. I think case in point right now, though, Gary and Glencore have sort of really proven themselves over the last several years. And you saw 90% voted in favor of their climate plan versus 2/3 only a year ago. It'll be very interesting to see when it's official, but if anyone thinks that Glencore's spinning out their coal business, they're not paying attention. Glencore shareholders have said, nope, you're keeping it. We can count the money. We see the value creation. You're keeping it. And it's pretty funny because, yeah, Glencore has a higher cost of capital, but they're the only guys who can invest in the highest returning opportunities in the mining industry.
Right. Where are you seeing opportunities right now, Koala? I mean, as far as where you are particularly putting some of your own capital to.
I think I've dabbled in PGMs this year. I think there's some opportunity there, especially with the fact that EVs are taking longer than we all thought it would take. Hybrids are clearly getting adoption. And at these prices, if you can find the right balance sheets to have duration in the call, I don't think PGM prices can stay here for several years. Find the right balance sheet, something that's not burning a lot of cash. I've said publicly before, I've got a small position in Sylvania Platinum, which treats the tails of Samancor Chrome in South Africa free cash flow neutral right now, but has, I didn't look, 80 to 100 million of net cash right now. To me, I'm like, okay, I have a 5-year call option on a PGM cycle. And I think that's something contrarian. I still think the coal opportunities there. I think the high grade iron opportunities there. I'd say, ironically, for copper right now, I mean, outside of Filo, Vicuña, and some Ivanhoe Electric from several years ago, I don't really have that much pure copper exposure.
Really?
My performance this year is hurt for that, but yeah, just focus much more. I mean, there's some exploration stuff, but to me, that's early stage. But to me, I look at this and I go, yeah, I think the opportunities are elsewhere. I mean, U.S. Steel with the Nippon situation, you're like, okay, is that deal really going to get blocked? But what does it look like if the deal breaks? How is Vale trading at 11.40 with iron ore over $100? Is everyone scared of Lula and Brazil now? Yeah, I just looking around. I mean, obviously, still have a bunch of high quality lithium investments, but yeah, I'm looking around saying if the cycle is really happening, all these commodities are somewhat reasonably correlated. It's surprising to me. Copper is kind of the gateway drug for everyone here. Yeah. Looking.
You mentioned PGMs, and it made me think about Ivanhoe and Platreef. I mean, how much of Platreef is kind of built into Ivanhoe's valuations right now? I mean, I think that they're scheduled to come online here this year, isn't it?
In the next year or so.
Next year or so.
I think Platreef for Ivanhoe is. I think Kamoa-Kakula and the Western Forelands are so massive. I think it's almost an afterthought to the market. I think it's going to, where there's a lot of pain right now in PGMs, I think it's going to inflict even more pain and hopefully maybe accelerate some of the rationalization that needs to happen. But yeah, I mean, feeling a little contrarian there.
Wow. All right. Koala. I mean, what else am I missing? What else do we need to hammer home? You had a hit list of ideas that people wanted you to comment on, and I think we tried to, in general, we tackled many of them. I can't remember if there was any we're actually missing here.
I think I think the one thing we kind of that we didn't touch on in the geopolitical is I think there's a starting to be a realization that uh, if we're not going to do it, um, others will. I think I'm really excited to see this summer what the ISA, the International Seabed Authority, says around deep sea mining. I'm very curious because I think as we're looking for deposits, um, we have everything. We have everything at play there. We have Greenpeace has boarded ships. We have eucalyptus paradox. We have fear of the unknown. But then you also have the fact that do you want to, as I say, take a little vacuum Dyson and put it on the sea floor 20,000 feet below and pick up these nodules that are free lying? Or do you want to strip mine the Indonesian archipelago to the point that it actually is undersea mining? Like, we, as economic development has occurred, we continue to become more metal intensive. And I haven't been on with you this year, but in my travels late last year, it really hit me. I don't think China's the be all end all anymore. Unless you're going to call that China is going to implode or crash, it's like, okay, China just has to play ball here. I mean, if you add up Indonesia, and I'll call Southeast Asia being Thailand, Vietnam, Cambodia, Myanmar, I'm not even including, to be clear, I'm not even including India yet. But factor in India, factor in the Arab world, or as at the FMF conference in Riyadh in January, they were calling like the new supercontinent or super region. There is so much new demand and development happening in populations that are magnitudes bigger than China alone. And I think we aren't paying enough attention to that because as we think about decarbonization, the reality is these guys are going to become, these regions and these countries are becoming more metal intensive, more metal demand. And this is no longer a case of, oh, US, Europe, and China. And I think the influence of these countries is going to be a factor.
I guess if you're looking at the other companies, instead of just China, if you're looking at all of Asia, Southeast Asia, Central Asia, and you have this rapid growth, I mean, what does them playing in this, sandbox look like? Is it creating new nationalized companies or even their own, private companies? Is it sourcing their own metals from other providers, which I would assume would kind of be lenient on China to provide and supply those metals? I guess what does that overall look like?
I think it's will they follow the Japan model? They're gonna. I think you're gonna see people follow the Japan model. Japan, very developed nation, but not a lot of resources in their country. Look at Sumitomo Metal Mining. They own 25% of Morenci. They own, call it a third of QB2. They have a piece of Candelaria. There's also a little North Parks in there, and there's one other big asset I'm missing. But
Casino. They own part of Casino. I think sorry, that's Mitsubishi. That's Mitsubishi. But
you're thinking of Mitsubishi.
Yeah, excuse me.
And they're also a big they have nickel, they mine nickel in Indonesia, but copper wise, they have a lot of minority interest because they want feed. The Saudis, my impression when I was there in January is they want they want to have feedstock so that they can build processing and take advantage of cheap energy in the kingdom. But you look at these things and you say, okay, if the Chinese check isn't good anymore, there's Japan. Do the Saudis? Oh, Serra Verde, I forgot, of course. Where is the bid going? the capital because your people are going to want the units of metal. Simple as that. So do you see the Saudis get more active? And hopefully the Saudis do, because what have we seen so far? We have seen Vale Base Metals, and there's been speculation they'll be Barrick's partner on Rekadik in Pakistan. Where are the... I think you're going to see a lot more of that. Because if the West is not going to, and the capital markets aren't going to finance these things, you're going to have to see these, call it sovereign wealth, minority partners show up.
All right, Koala, thanks so much for your time. We took up quite a bit of it. I appreciate you. These are always such eye-opening conversations, at least for myself. Like, he's just a wealth of information.
I'm kicking myself right now for missing copper today, but this year. But it's not as many fresh new ideas this year. But it seems like everyone's interesting time in the cycle.
Yeah,
it's okay not to always have fresh new ideas.
Does it feel like one of those times to sit tight and be right?
You know what? Yeah, no point trying to push something. I think my bias is to quality and letting time and just execution work for me. The urge to push things is just not there right now. Don't feel the need to force it.
Sound advice from the eucalyptus tree. All right, Koala, good to connect with you, buddy. Thanks so much.
Cheers, Trevor.
Yep. All right, that's the Koala. If you are not following him on the Twitter X platform, he's at Yellow Lab Life. And that's a wrap here for us this week on Mining Stock Daily. We'll be back Monday morning with the morning briefing, everybody. Have a wonderful weekend and be well.